It should be streaming right now. So, uh, good morning, Empower Mom entrepreneurs. I guess almost afternoon. I have a special guest with me here today. It's Clare Vazin. Oops, I got to mute this voice. Um, anyway, she's a CPA and she's here to help us with her end of year taxes. And also, she's going to share how she got into business as well. So I know, Clare, you have been in business by yourself since 2009, right?
Yeah, I started off in working in public accounting firms, getting some experience and knowledge. I worked for the same firm for 11 years, and then went off on my own. And it was really having children that kind of triggered me to take that chance to go off on my own.
Yeah.
Public accounting is notorious for being very demanding, where they own you kind of like a law firm. It's like 60, 70, 80-hour work weeks and they still want more. So it's very difficult to feel like you're advancing in your career if you're trying to put your family first in the traditional CPA firm environment. So once I had kids and I was like, this is not going to work for me, but I don't want to just be, a body that just does tax returns and is not valued and it's not growing and everything, then I've had to kind of think about how can I reinvent, what I do and still bring value and be, have it be fulfilling, but still, have my children know who I am and stuff, so.
Yeah. That's so common in many industry. When I was in computer science, that was the same thing. We had long hours, and when we had to do a product release, we had to work weekends. We almost had to work at Thanksgiving once.
Yeah.
So I totally can relate. And so did you transition slowly into working by yourself, or how was the process?
It was kind of, it was a thought. I think the slow part was getting enough courage to actually do it, because I had been thinking about it. I had a few clients on the side and things like that, but I wasn't fully leaping in until I had my second son. And then it was just, I have to, and I have to try. So I initially just kind of left. I did contract work for like virtual CPA firms and stuff. And so that was an easy transition for me because I was on my own, but I wasn't totally, have to build a firm from scratch right away. I was able to get contract work because I was experienced enough and kind of just be comfortable not getting a paycheck and having to, get the contracts and get paid in a different way and get comfortable with that first. And then from there, it was kind of a little bit of self-exploration for the next couple of years to just kind of figure out where I felt like I fit and what kind of firm did I want to form and develop and grow. And so there was a lot of that, just figuring out what I wanted and getting comfortable with it. And I knew that I wanted to focus more on planning and adding value to clients and not just be somebody who just, cranks out tax returns, and that's it.
Right, so. Right. And so, it's been a while since you transitioned from working for someone to on your own. Looking back, what do you recommend moms do if they're in the professional field and it's going to be turn into an entrepreneur? I started very young, so I didn't have any demands like now, and then I don't have the same kind of pressure that a lot of moms do as well, because I had set myself out pretty nicely so I could transition, but not all moms have that cushion. So what do you recommend that moms who are in your situation and want to go on their own?
I think the biggest thing is to not be too hard on yourself, because I feel like especially most of the moms that I know, women are we're very hard on ourselves usually. And so there's this almost like this self-fulfilling prophecy where you feel like you have to be perfect, and you set your standard according to what you see somebody else doing. And you think if you're not doing that, then, oh, you're just not good at it. And you kind of defeat yourself a little bit. And so for me, it was kind of like, I don't need to work like anybody else. I can work how it works for my family as long as my clients are still getting service. It doesn't have to look like everybody else. So, if for you going into an office and doing, the traditional 9 to 5 works great, that's fine, but that doesn't have to be. So I guess that the main thing is to just kind of take some time to kind of reflect on what would be your ideal environment, and then start setting yourself small goals to get there. And what are your non-negotiable things? Like if you want to have every weekend free with your kids, or at least 90% of the time, then you have to set yourself boundaries, because it's really easy to get sucked into meetings all weekend and everything because you don't want to say no to anything. But you have to decide what those non-negotiable things are up front, and really do your best to stick with it.
Yeah, I can understand that initial start where you're just so hungry and you'll do anything just to make your business start. Yeah. Yeah.
Yeah.
So
yeah, and you just have to set those limits, and it's hard to do because you do feel like, oh, I shouldn't have these limits because I'm just starting out, but you have to, because otherwise you end up building something that's not better than what you had before. So
yeah. Well, Christina says great topic, and it's so true. So Christina, if you have any questions, Claire is here to answer, and later on she'll talk about what we can next do for the end of year taxes and be ready for 2022, for instance. So do you have any other great tips for moms she says, to be gentle with myself is the lesson that I learned the hard way. Yes. I can totally relate. Like, the thing about us being hard on ourselves as women is it's actually taxing to not just our business, ourselves, and our family. And so
yeah.
Did you have that situation happen to you when you're just like,
yeah, I mean, it's like the balance of feeling like you have to be everything to everybody. You have to be the best wife, you have to be the best mom, and you have to also be, the top in your career, and it's like all of these things that you feel like have to be like 110%, and you're only one person, and you find that you're not taking care of yourself. And if you don't take care of yourself, then everything else just starts to fall apart around you. So and taking care of yourself looks different from everybody. That was the other thing that I had to accept, because for one person, they need to take a day off to do something on their own, and somebody else, it means something else. And so you have to decide for yourself, what does that mean to take care of yourself? And for me, it's just not piquing myself to a fault. Like if I honestly feel like working at midnight, I can work at midnight, and that's not a fault. But if I feel like guilty that I'm not working at midnight, that's a problem, So, right. So it's kind of just, just accepting those things and embracing those differences, and do what works for you and what works for your family.
Yeah.
And everything else kind of starts to fall into line better. And it's always a work in progress, but
Yeah, so it sounds like there's a trial and error, and see what works, what doesn't work, and and what works for you doesn't necessarily work for other people, and vice versa. Like, I don't know how many people who tell me, "Hey, you meditate," and I'm like, I cannot meditate. My brain just wanders. You're like, do guided meditation. I'm like, still doesn't work. So I'm glad you said,
I have the same problem too. I start thinking about, something, and it's not always, I mean, sometimes it's a client project, or it just might be just, the picture on the wall. I don't know, but I'm just like, my mind is empty mind does not ever seem to be there. Okay.
Yeah. And so before we talk about what is about, helping us with the end of year taxes, is there anything else you have like any words of wisdom about just launching on your own?
I think just having a good foundation. It's like,
Yeah.
there's a point of it where it's just taking a leap. So you're not going to have everything perfect. So it's not about being perfect, but it's just kind of having a plan, a foundation, a plan, knowing that it's not always going to go according to plan, but you have that foundation of what are you envisioning? And it can just be like a shell of a foundation. I think I'm going to do this. I'm going to set up this entity structure. I'm going to, grow this line of my product or my service or whatever. And just having a general framework of where you want to be, and then make sure that you go back and revisit it periodically too. Just like taking that little bit of extra time to spend time in your business instead of just always feeling like you have to catch up. And that's been a hard lesson for me too, because especially in my industry too, there's like always a project to work on. And so forcing myself to actually take time to go, it's not a waste of my time to spend a couple of hours, working on making a process more efficient or something like that. So
I'm going to pick your CPA brain a little bit. And so I know like a lot of people have a fear of just jumping because of financial reasons, because there's in a world of what if situation, like it's not guaranteed. And so is there like a rule of thumb where you could save for, I don't know, your business, or is there?
Yeah, I mean, I don't know if there's like necessarily a rule of thumb. It's just kind of like you have to kind of look at what your personal financial situation is. I know that they generally say like you want to have like about a year, where you don't necessarily need to draw a certain salary to survive, to pay your bills. Because, most businesses are not going to right away be cash flow positive. Unless you have a situation where you have like some kind of a service line expertise, like what I did, where I could supplement with contract work, right? So I could do like 20 hours a week of contract work, and my contract rate is much higher than I would be as a W-2 employee while I build client base. And that's kind of what I did. So it kind of depends on what area you're in. But if your business requires you to be 100% focused on the growth of your business, and it's not going to right away generate revenue, then generally they say like about a year, where you're okay. You have some other source of revenue or savings or something to pay your bills and your rent and all that kind of stuff. So you're not just going into massive debt without knowing when it's going to end. So.
Wow, a year. And so, and that's on top of other business expenses, right?
Yeah, I mean, it really depends too. Do you have like, a spouse that brings in revenue you can afford? Maybe it's going to be tight, but is it okay? I mean, obviously it's much different if you're like a single parent and you are the breadwinner, then you definitely need to have that buffer. But if you've got somebody that's like, all in, I can help you, we can struggle a little bit, we got to cut back on things, then you could probably do, maybe 3 to 6 months or something like that. But a lot of it depends on taking a real look at what you think is reasonable for your business. Like when do you think, is this something that you're going to be able to like get a couple of clients and then right away you're going to be able to be cash flowing positive, or is this something that's like a product that you have to go through development stages and big marketing campaign and all of this stuff, and do you have people to invest in you? So it's kind of just taking a real look at it. It's this balance of being prepared but not being so prepared that it scares you away from jumping.
All right. Wow. Okay. Well, thank you. So we have about 20 more minutes till we both got to go. So could you just jump in and just give us a rundown of what we need to prepare for the tax season that's coming around the corner?
Yeah,
I will let you screen share. Oh, actually, you're on a phone, so you can't screen share.
Yeah, that's okay. Yeah, my phone is kind of weird. obviously we're at the end of 2021. So most small business owners that I've talked to, again, kind of like everything else, don't be too hard on yourself. It is very, very common that people have been, especially if they're solopreneurs, they've been so busy running their business, trying to get clients, bringing in money. They may not have any sense of accounting, or it might not have been looked at for 6 months. That's okay, but now's the time to try to get it caught up, so that you're not scrambling. Because you don't want to have that over your head where you're just kind of like, you have no idea what your taxes are, you have no idea what it is. So that does need to be something that's taken care of. That is also something to, there's bookkeepers that you can hire to just do, a few hours of bookkeeping to get yourself caught up. So I would say making sure your accounting is relatively clean would be the number one thing. Right now it's the best time to do any kind of tax planning, tax projections, because if you do a projection for year end, there's still time to take action if there's things that you could do to lower your tax bill or plan for it better. And it does make you sleep better at night, not knowing, you don't know if you're going to have to pay 20 or 30,000 or, penalties and everything. That's not comforting. You want to at least know what that number is and be able to plan for it. So now's the time to kind of do that. Also considering just like entity selection, that's all. Sometimes some people, plan it right out front, but a lot of times new business owners, they don't really know what the best entity choice is for them, or what does it mean from a tax perspective, what are the requirements, how are they taxed. So kind of making sure that you understand that and you understand why you're in the entity you are, and is it really best for you? That's probably the number one question I get from entrepreneurs is, what entity type should I be? And it always depends. I always tell people that if there was one best choice, then there would only be one choice. But so it really depends. But for each person, you kind of got to look at it and say, for you, this is what makes the most sense from a legal and a tax perspective. So having those things looked at, if you don't know, consulting with somebody that can help you determine whether or not you're in the best structure for your business.
Yeah, we had a pleasant surprise last year. We actually accidentally jumped into the next tax bracket. So I can totally, I was like, oh, we were expecting money back, but we actually end up paying more taxes. Like, dang. So
those surprises are never fun. So at the very least, you want to avoid the surprises. And sometimes you get the pleasant surprise of finding out that, maybe you're just barely in the next tax bracket, and there's something that you can do to change that. Or, there's a credit that you qualify for that you didn't know you qualified for. There's just, sometimes there's things that can be done. So.
Okay. And then, so what are the common tax ways to lower your tax bill for entrepreneurs?
For entrepreneurs is, again, the number one is actually having clean books, because entrepreneurs, especially solopreneurs, sole practitioners, very commonly, they pay with whatever means they have at the moment. So they might have personal credit cards they're using, and they're using. So those things, although you're supposed to, keep that to a minimum, it happens all the time, and deductions get lost. So I would say that's like the number one thing. Then beyond that, making sure that you're considering, your home office, any kind of vehicle expenses if you use your vehicle for your work. You do want to know the rules around it, but making sure that you're capitalizing on those, making sure that you're capitalizing on any depreciation, maximize any assets that you purchase. Those things I commonly see, opportunities where somebody could have got bonus depreciation and it wasn't taken on their prior year tax returns and things like that. And then retirement planning too. If you did make money and you've got available cash flow, then putting money in a retirement account will lower your tax bill. So why not put it there instead of paying as much to the IRS. You do have to have the cash flow for that, but that's definitely a consideration. And then there's sometimes other things that can be done. You like tax strategies that can be done. There's a rule called a 14-day rental rule, where you kind of, if you could use your home for your business, like if you have a business party, something like that, where you invite your employees over, your company can pay you for that, and it can be tax-free because it's less than 14 days, but your business gets to deduct it. So there's like a few little things that you can do. It doesn't apply to everybody, but for some people it does, and they just don't know they can do it. So, so there's a few little things. You can also hire your children if they're old enough to actually be useful. So,
is it 16? What age?
Yeah, I mean, it's not really a particular age. It's really just that it's reasonable that they're actually doing something that's benefiting your business. So they could be doing shredding, they could be doing filing, they can be helping you with social media, you know, or whatever. And you can pay them, and you can also fund, you know, pay them and start setting up retirement accounts for them. There's a lot of different things that you can do. And there's benefits to doing that, because you get to write it off, and you're obviously spending a lot of money on your kids anyway. So.
Okay. And so when people are looking for tax accountants for their businesses, what should they be looking for?
Well, you definitely want to make sure that the person you're talking to has experience with small business. There's a lot of tax preparers that are, you know, really exclusively do 1040s, and that's just an individual return. So even if you're just a sole proprietor, you want to work with somebody who has small business experience, has experience with partnerships and S corps and all of those. Just because if your business grows and it benefits you later down the line, you don't want there to not have that conversation about what entity you should be in. So that would be the first thing. And then what industry you're into. You want to make sure there's special things to consider, especially if you are in a very niche kind of industry. You want to make sure the person that you're talking to has enough experience or knowledge in your industry or similar industries that they're going to actually be able to advise you on specific things. Because, you know, if you have a specific transaction that's very unique to your company and the person doesn't even know how your business operates, it's really hard for them to advise you properly.
So I gather if you have a friend who's in your industry, then ask for their accountant's name and all that stuff. Yeah.
And also take up the accountant's offers of free consultations and see who you feel a fit with too, because sometimes it's not even just about knowledge. It's just about, do you feel like this person communicates well with you, you know? So.
Yeah. And then, so I've come across numerous types of accountants. There's ones that are really conservative in a sense that they're always thinking, I don't want to be approached by the IRS. And there's ones who are like, yeah, I don't care. I can fight the IRS. I'm going to fight for my clients. So is that something a lot of entrepreneurs should focus on? I know I focus on it, but I don't know about you.
Yeah, I mean, that is something to consider, because there's you know, a whole big gray area within, you know, the tax code. And, you know, there's obviously things that are clearly wrong and clearly fraud, right? But within that, there's this whole big gray area. And some people are like way down here, super ultra conservative, and they're almost act like they are auditors, you know, when they're doing your tax return. And then you have a lot of in between. So you do want somebody who's kind of on your same page, but at the same time, it's going to kind of keep you out of trouble. So like, if you're willing to take some risks, as long as you have some kind of a precedent, you have an argument to protect yourself, and you know that maybe it's a little bit more aggressive, but you're okay with that, then you do want to have somebody who's willing to have that conversation with you, like, you know, to advise you, okay, this is going too far. You're going to set yourself up for, you know, a bad audit and very unlikely to win. You do want somebody who's going to be honest with you and not just say yes to everything, but at the same time, there's a huge, big gray area. So you do want somebody that, you know, if you're the kind of person that likes to research things or hears about something and you want somebody to have an honest conversation about whether or not this is a good strategy, they have to be open to having that conversation. So.
Okay. Oh, I always thought, I've never gotten in trouble, but I always thought if you have an accountant, you're basically safe, but you're not.
No. Ultimately, that's kind of the thing that gets people in trouble, is that ultimately the taxpayer, when you sign your tax return, you're basically saying you're responsible for everything, which is almost not fair because most people don't know what they're looking at other than this is how much I owe. But that is basically what you sign. Now, there is something, if you relied on expert advice on a particular transaction, that you can use to get yourself out of some of the penalties if you get audited and it gets disallowed, but you're still ultimately responsible for it and for the tax bill and for the stamps and everything. So you do want to make sure that you know, who you're working to is going to be advising you correctly, because just because they say yes and they stick it on there doesn't mean that you're protected.
Okay. Oh, well, thanks. I learned so much today. Hire my kids. The accountants are not, it's not safe. Well, not in terms of like, I can't hide behind my accountant, behind my tax return.
Yeah, and I kind of lie kind of like a little bit in the middle, because I try to kind of like read my clients and see, like, I have some clients that, you know, their biggest concern is I never want to see an audit and I'd rather just pay more tax. Then I'm not even going to entertain anything that's maybe aggressive, right? This is what it is. It's very clear cut. And then you have other people that you know, are more in the middle, and, you know, we'll have those discussions about, you know, yes, you could do that. There's nowhere that says you can't, but here's the risk you run if you make that choice. You know, here's what the IRS might say. Here's what kind of things that you should put in place to document that you had a reasonable, you know, basis to make this stance. And then you have other people that you constantly have to like reel back in. You're like, whoa. That's like, like, please don't do that. But most people are more in the middle. So.
Okay, good. And so I would like to know, what is your specialty? Like, who do you focus the most when you do your taxes?
So we do small business owners, all different industries. We do have a special niche in the real estate market. It has its own, like, almost its own tax code. So real estate investors definitely should go with somebody who specializes in the real estate industry. So that is one of our niches. A lot of our real estate investors also are small business owners. So even if we wanted to, we would never be exclusively real estate. But we do lots of other industries, but we have like restaurants, we have consultants, we have manufacturers, we have schools, most industries. And we are very open about, if we had somebody that had a very, very unique and complicated business model in a very niche industry, you know, we would say, you know, hey, we're not the best fit for you. You need a specialist that really knows this. One of them would be like cannabis. So cannabis is something, there's firms that specialize, and that's like all they do, because it's got its own issues. So.
Wow.
So.
Yeah. Oh, that's really interesting. And if somebody were to contact you, what would they expect the initial consultation to be like?
So we don't charge for the consultation. It's really just kind of a get to know you kind of a thing, where I get to know like what your situation is, what your business is, I'm happy to give like general advice just on the call if I have it, if I feel comfortable with it. And then from there, we just, you know, continue to talk further if we see a mutual benefit to, you know, working together. Otherwise, we can just keep in touch, and I'm happy to be a resource. I do offer tax planning, tax assessment, which involves like looking at prior year returns and giving some general guidance on, you know, what I would recommend going forward as well.
Okay. And so how can we contact? I think you're here in San Diego. However, you and your partner does other states as well.
Yes, we do. Our firm does nationwide. Most of our clients are California, but we have clients all over the U.S.
Okay. And then how would we contact you?
So should I put my email in the chat for you to share it, or how does that work?
Yeah, I can just do that. Put this here right now. Yeah, do that, and I'll just cut and paste.
Okay. So this is my email, and then I have a direct booking link too if somebody wants to actually book a meeting with me.
Okay.
And my email and my booking link, and yeah, I'm happy to have a consultation with anybody that's just more information. I cut out.
And all right, so booking link. All right, let me see. Oops. Let me cut and paste that. Things are not working for me right now. It froze, so I'm going to cut and paste into Notepad your booking link, and then when it comes back, and that's it. And so I have to go soon and pick up my daughter. It's half school day because it's parent-teacher conference here in San Diego.
Oh, yeah, that's right. Yeah.
Yeah. So, any last words of wisdom before we sign off?
No, just it's hard being a working mom, but it's rewarding too.
Yeah, it is.
My kids are unusually quiet right now because I let them watch a video.
Oh.
Otherwise, there would be all kinds of chaos with my boys running in here and needing me for everything.
Yeah, well, oh, your kids are not school age?
They are. Well, there's 8 and 5. They actually are homeschooled.
Oh, so, okay. Oh my gosh, you have a lot of demand on your time. So, well, thank you so much. And I actually learned a lot, and it was so much fun. So I would love to have you again around this time next year, just to have the same conversation with the same group. And thank you so much.
Sure. Thank you. Have a good day.
All right. Thanks.
Thanks.